It is Friday, December 5, 2025, and the market is alive, buzzing, and reacting to what has been a fascinating week for defense technology. Right now, at this very second, BigBear.ai, ticker symbol BBAI, is trading right around the $6.92 mark, battling to hold the psychological $7 level after a massive surge yesterday where it closed at $7.02. We are seeing some typical morning volatility here, with the stock pulling back slightly in the pre-market and early hours, hovering near that $6.90 to $7 range, consolidating after a 15% rip to the upside during Thursday's session. The volume is kicking in, the traders are watching the charts, and the air is thick with speculation. But if you are just looking at that green candle from yesterday and thinking this is just another pump, or if you were looking at the red pre-market tick and thinking it's a dump, you are missing the massive tectonic shift happening underneath the surface of this company. The expectation for BigBear.ai has long been that it is a story stock, a company with a cool name and a lot of buzzwords about artificial intelligence, but one that ultimately lacks the financial runway to compete with the giants. Investors expected to be a volatile, speculative play that you trade for a quick buck on Robinhood stock trading apps or perhaps stash in a risky corner of your Fidelity brokerage account hoping it pops. That is the expectation, a high-risk, low-substance gamble. The reality, however, is significantly more interesting and contradicts that fragile narrative entirely. The reality is that BigBear.ai has quietly transformed its balance sheet from a point of weakness into a fortress of nearly $715 million in cash and investments. This isn't just a small-cap AI company hoping to survive the winter. This is a capitalized defense contractor that just dropped $250 million to acquire Ask Sage, a move that fundamentally alters its revenue profile and its standing with the U.S. government. While the retail crowd is arguing over pennies in the daily chart, the institutional players, like the Swiss National Bank, which recently increased its stake by over 50%, are positioning themselves for a much longer game. This disconnect between the meme stock perception and the defense prime reality is where the opportunity lies, and that is exactly what we are going to tear apart today. When we look at the immediate price action, that 15% move yesterday wasn't random. Sure, you might see headlines about the company partnering with the Washington Commanders for the My Cause, My Cleats initiative, which is great for public relations and community building, but let's be real. Smart money doesn't buy millions of shares because of football cleats. The momentum we are seeing now is a delayed but powerful reaction to the company's strategic positioning for 2026. The market is finally digesting the implications of the Q3 earnings report released back in November. On the surface, the bears looked at that report and saw revenue down 20% year-over-year to $33.1 million. They saw the end of certain high-margin contracts and screamed, "Sell." But the smart money, the folks using sophisticated tools on interactive brokers trading platforms or analyzing deep data in interactive brokers trading sites, saw something else. They saw a beat. That $33 million was actually higher than the $31 million Wall Street expected. They saw net income flip positive to $2.5 million. Now, I will be honest with you, that net income was largely due to non-cash adjustments in derivative liabilities, not pure operating profit, but it signaled that the financial bleeding is under control. This is the kind of nuance that separates successful self-investing from gambling. If you are using investing sites or managing your own Schwab Intelligent portfolios, you have to look past the headline number. The drop in revenue was due to lower volume on specific Army programs that are cycling out, which is a natural part of the government contracting life cycle. What matters is what is coming in to replace it. And that brings us to the Ask Sage acquisition. This is the catalyst that the market is just now starting to properly price in. BigBear.ai isn't just building tools anymore. They are buying revenue and capability. Ask Sage is a generative AI platform specifically designed for the government, secure, compliant, and ready to deploy. By paying $250 million for this, BigBear.ai is effectively buying an immediate $25 million in annual recurring revenue. This is a crucial pivot. It moves them away from lumpy project-based consulting revenue toward the holy grail of software investing, recurring revenue. Let's pause for a second and think about the broader context. We're in an environment where geopolitical tensions are not cooling down, they're heating up. The United States government is not looking to spend less on defense, they are looking to spend smarter. They need AI that works, AI that is secure, and AI that doesn't hallucinate when it is analyzing troop movements or supply chains. This is the decision dominance that BigBear.ai sells. It is not just about having data, it is about having the right data at the exact second you need it to make a decision that saves lives or wins battles. This is why you see comparisons to Palantir technologies. Investors love to ask if BBAI is the baby Palantir. It's a fair question. Palantir paved the way for this entire industry, showing that the government will pay massive premiums for software that integrates messy data silos. But where Palantir is the Goliath, BigBear.ai is trying to be the agile David, specializing in areas like computer vision and edge AI, running algorithms on drones and hardware in the field, not just in a server room in Virginia. The technical setup for the stock right now is incredibly tense. We are trading above the 200-day moving average, which is a classic bullish signal for anyone doing technical analysis on their SoFi trading platform or checking charts on the Fidelity mobile app. When a stock reclaims that long-term trend line, it often signals a regime change from downtrend to accumulation. However, we are also hitting resistance. Every time the stock pushes toward $8, it gets swatted back down by profit takers who have been stuck in the stock since the highs of last year. This creates a battleground. You have the bag holders from 2024 trying to get out at break even, and you have the new money, the institutional buyers and the aggressive growth funds trying to get in before the 2026 growth story fully kicks in. This friction is what causes the volatility you are seeing today. It's not manipulation, it's just the natural churn of a shareholder base rotating from short-term speculators to long-term believers. Speaking of believers, I want to hear from you guys. Comment below how many shares of BigBear.ai you currently hold, or if you are sitting on the sidelines waiting for a specific dep. It's always fascinating to see the average position size in these battleground stocks. Now, let's dive deeper into the business model because this is where many retail investors get lost. Unlike buying Apple stock or Nvidia stock, where you can walk into a store and see the product, BigBear.ai's product is invisible to the public. You cannot download Conductor OS on your iPhone. This software sits inside the classified and secure networks of the U.S. Army, the Defense Intelligence Agency, and other three-letter agencies. They build digital twins, virtual replicas of physical environments like a battlefield, a shipyard, or a supply chain. By running simulations on these digital twins, commanders can see what happens if a shipment is delayed, if a unit is ambushed, or if the weather turns bad. They can pre-live the future and make mistakes in the simulation so they don't make them in reality. This is sticky business. Once the Army builds its logistics planning around your software, they don't just switch to a competitor because they offered a 5% discount. The switching costs are astronomical. This creates a moat, a protective barrier around BigBear.ai's revenue that is much stronger than it appears on the surface. However, we have to address the risks. We cannot have a holistic conversation about this stock without talking about the cash burn. Even with the massive cash infusion, the company has historically burned money. Adjusted EBITDA was negative $9.4 million in the last quarter. That is a reality check. If you are using SoFi Invest or a robo-advisor like SoFi Robo-Advisor, you are usually steered toward profitable companies for a reason. Profitability protects you during downturns. BigBear.ai is not profitable on an operating basis yet. They are betting that the Ask Sage revenue and the new Army contracts, like the Global Force Information Management prototype, will scale them past the break-even point. If they fail to execute on these contracts, or if the government delays the budget, which, let's be honest, happens all the time, that cash pile will start to dwindle, and the stock price will suffer. This is why you shouldn't just throw your entire life savings into this one name. It belongs in the high-risk, high-reward portion of a portfolio, perhaps alongside your speculative crypto holdings on Robinhood Crypto or your fractional shares of other growth companies. But there is a new variable in the equation: the political landscape. With the shifting administration and the focus on peace through strength, there is a widely held belief that defense spending is going to pivot heavily toward technology. We are moving away from buying more tanks and toward buying more software. The one big, beautiful bill concept, essentially a massive consolidation of government procurement, could benefit companies that are already vetted and in the system. BigBear.ai is already in the system. They have the security clearances, they have the past performance ratings, and they have the partnerships. This reduces the barrier to entry risk. A startup in Silicon Valley might have a better algorithm, but if they don't have the clearance to touch the data, they are useless to the Pentagon. BigBear.ai has the clearance. Let's look at the institutional activity again because it's the most bullish signal we have. When entities like the Swiss National Bank or major funds managed by BlackRock or Vanguard increase their positions, they're not day trading. They are